So imagine you're watching a highly sophisticated algorithm, right? And it pulls off this miraculous, heroic recovery.
Right.
You're looking at the observation logs, and this logic just climbs out of a massive deficit by midweek. I mean, it's banking these incredible gains by Thursday.
It's like a total victory on paper.
Exactly. It looks like total victory. But then, you analyze the Friday data, and you realize that the entire recovery was just, well, a mathematical illusion.
Yeah, a complete mirage.
Right. And the exact logic that seemed to save the algorithm fundamentally shatters itself against the rocks just 24 hours later.
And that phenomenon right there is the critical difference between theoretical potential and locked-in reality.
Oh, totally.
Because when you subject a logical framework to a truly hostile environment, the resulting stress fractures, they reveal the underlying mechanics of survival much more clearly than, a string of easy victories ever could.
Which is exactly why we're here. Welcome to the Deep Dive. Today, we are cracking open the raw observation logs to examine those exact stress fractures.
It's a really fascinating week to look at.
It really is. We are analyzing an incredibly turbulent week from Team AI Labs telemetry, specifically June 15 to June 19, 2026.
Yep.
And we have two distinct algorithms battling the elements here. On one side, Team Mountain Climbers, who use an equilibrium detection logic. And on the opposing side, we have Team Wave Riders, fueled by a surging force tracking logic.
Well, before we dissect the structural integrity of those algorithms, I need to draw a very firm line for you listening.
Go for it.
This deep dive is strictly an exploration of research data logs, okay? And the structural market logic they reveal. We are just analyzing the raw, unfiltered behavior of custom algorithms under extreme stress to satisfy your intellectual curiosity.
Right, just looking at the data.
Exactly. This is absolutely not financial advice. It is not a recommendation to buy, sell, or hold any asset. I mean, it's a sterile, objective postmortem of how logic survives or fails in the wild.
Pure observation.
Right. Predicting future market performance is entirely outside our scope today.
The pure science of algorithmic attrition and adaptation. And to really understand that science, we need to establish our baseline, right?
Yeah.
Specifically, the metric of success.
Yeah, the point system.
Right. Team AI Lab uses this distinct point system to track performance across the season. So these aren't just, simple percentage gains. It's an aggregated performance unit.
Think of a point in this ecosystem as a standardized unit of logical success. It normalizes performance across entirely different sectors.
Right, because comparing a tech stock to a utility is tough.
Exactly. Whether an algorithm tracks a super volatile tech stock or a slow, heavy utility, the point system lets us compare the effectiveness of the logic on a single unified scoreboard.
It strips away all the noise.
Yeah, it ignores the asset price and focuses purely on the accuracy of the algorithm's timing and selection.
Okay, so let's look at that scoreboard on Monday, June 15th. The Mountain Climbers are equilibrium logic. They start the week carrying a remarkably heavy burden.
A huge deficit.
Yeah, they open Monday with a season total of negative 37.7 points. Meanwhile, the Wave Riders, tracking momentum, they have a comfortable baseline of positive 9.3 points.
And the underlying mechanisms of their logic dictate exactly how they handle those starting positions.
How so?
Well, the mountain climbers operate on elasticity. Their equilibrium logic assumes the market is basically a massive rubber band.
Okay.
So if a sector gets stretched too far downward due to selling pressure, the algorithm calculates a mathematically inevitable snapback to the historical mean.
So they're looking for extreme drops.
Right. They aggressively search for units where that rubber band is stretched to its absolute limit.
While the Wave Riders, they apply something closer to, fluid dynamics.
That's a good way to put it.
Right, because they don't care about the rubber band or the historical mean. They just look for a current. If they detect a surging force, like a violent influx of volume and price action, they latch onto it.
They assume the sheer velocity of the movement will just carry them forward before friction slows the trend down.
And knowing those mechanisms makes the midweek data absolutely wild. The climbers start in that deep hole of negative 37.7, right?
Yeah.
But by Wednesday, the observation logs show this incredible pivot. The climbers actually crossed back into the green, hitting positive 6.7 points.
It's quite the climb.
And then by Thursday, they are soaring at positive 24.0. And the Wave Riders reach a massive positive 53.7.
Looking at the logs, it seems like both strategies just completely mastered the environment.
They definitely looked like they mastered it, but that picture was artificially inflated.
Inflated how?
Well, by the mechanics of the active roster.
Yeah.
To see the illusion, we really have to examine the 10-session mandate,
Ah, right.
which is really the core engine of Team AI Lab's ecosystem. When an algorithm scouts and drafts a unit, it doesn't hold it indefinitely based on a feeling. It mandates a strict 10-session lifespan.
Okay, let's unpack this. It's like a built-in ticking clock.
Exactly.
Day 1, the unit is drafted. Day 10, the algorithm is forced to drop it. Precisely. When those 10 sessions expire, the unit is forcibly exited by the system. And whatever point score it holds at that exact moment is permanently locked into the season record.
Right, so you can't just hold out for a better day.
No, you can't. So those impressive scores we saw on Wednesday and Thursday, they were mostly floating scores.
Okay.
They represented the paper profit of units that were maybe on day 3, 4, or 7 of their mandate. It shows what might happen if they could cash out immediately, but they can't bypass the 10-session rule.
So the floating score is just like potential energy. It's an illusion of safety. The total score is glowing green, driven by units that just hadn't faced the exit mandate yet.
Yeah, exactly. The active rosters were throwing a party in the front, but the algorithm was fundamentally bleeding capital out the back door.
Wow.
Because the mandatory exits occurring midweek revealed the true structural integrity of the logic.
Right, so what happened when they exited?
On Tuesday, the mountain climbers saw units reach their 10-session limit across foods, banks, other products, and information and communication. The permanent, locked-in reality for those specific units was negative 13.7 points.
So the environment was letting their newer drafts float, but just mercilessly punishing the older units the moment the math forced a landing.
Yep. And even the wave riders who were dominating those floating daily scores, they hit a wall on Thursday.
A massive wall.
Right. They had units reaching the end of their lifespan in the services sector, and they exited for exactly negative 0.0 points. The momentum completely stalled out right as the exit door opened.
And that stagnation really exposes the core vulnerability of the 10-session mandate, doesn't it?
Absolutely. You can ride a brilliant surge from day 1 to day 8, but if the momentum evaporates on day 9, your locked-in exit on day 10 will reflect the collapse, not the peak.
Ouch.
So the tension building in the midweek logs was palpable. The active scores were swelling, but the locked-in permanent realities were quietly grinding the season totals down.
Which brings us to the Friday fracture, June 19th. That illusion of safety on Thursday was basically a trap.
A huge trap.
Because the exact same directional force that inflated their active scores midweek became the catalyst for catastrophic exits the very next day.
The 10-session mandate forced another massive wave of exits, yeah.
And the rubber band for the mountain climbers didn't just stretch, it snapped entirely.
The exit telemetry for Friday is staggering. The mountain climbers mandated units to exit across services, pharmaceuticals, and information and communication. And the locked-in score for that single day was a devastating negative 42.9 points.
A single day wiping out almost the entire midweek recovery. That is brutal.
Truly brutal.
I want to unpack the why here, specifically looking at pharmaceuticals. The mountain climbers' logic bought into pharma because the sector had dropped, right?
Right.
The parameters signaled that the rubber band was stretched far enough to trigger a reversion to the mean. They bought the dip. But instead of snapping back, the sector just kept dropping.
Yeah, the algorithmic attrition we see there suggests their standard deviation parameter was just way too tight for a structurally shifting market.
Okay, meaning what exactly?
Well, equilibrium logic assumes a baseline level of rationality, right? An assumption that institutional buyers will step in at historical support levels because the asset is perceived as cheap.
But they didn't.
No, in this specific week, the selling pressure in pharmaceuticals and services was sustained, heavy, and extremely directional.
So the algorithm kept trying to find a solid floor in a room where the floorboards had been completely removed.
That's a perfect analogy.
It was buying into a free fall, just waiting for a bounce that the environment had already decided wasn't coming.
Exactly. And meanwhile, the Friday exits for the Wave Riders present this really stark contrast.
The momentum team.
Right. They mandated exits in electric appliances and precision instruments, and they locked in a formidable positive 41.7 points.
Okay, here's my counter hypothesis on that victory.
Yeah.
Because the timing feels, suspiciously fortunate.
How so?
Did the Wave Riders' surging force logic actually outsmart the environment, or did they just happen to latch onto the only two life rafts in a sinking ocean?
That's a fair question.
If momentum logic is blindly following a trend, aren't they equally exposed if that upward trend in tech suddenly reversed on day 9 of their mandate? It feels like they won the exact same coin toss that the climbers lost.
Well, they are absolutely exposed to sudden reversals, which makes momentum an inherently fragile strategy in choppy conditions for sure.
Right.
However, the critical distinction in the Friday logs lies in temporary adaptation. The wave riders didn't need the market to act rationally.
Oh, interesting.
They didn't need an asset to return to a historical fair value. They only needed the upward current in electric appliances and precision instruments to outlast their 10-session mandate.
So they just needed the wave to carry them to the beach before breaking.
And in those specific sectors, the upward current was fierce and sustained throughout the whole week. The wave riders achieved temporary adaptation because their logic aligned structurally with an environment that was rewarding sheer velocity over intrinsic value.
Okay, that makes sense.
They survived the 10-session mandate not by outsmarting the market, but by refusing to fight the prevailing direction of the capital flow.
They didn't try to build a dam, they just rode the rapids.
Exactly.
But it's important to note that the algorithmic attrition didn't wipe out everything. Team AI Lab tracks a metric they call the survivors of the week.
Yes, the active survivors.
Right. These are the specific units on the active roster that managed to live through the Friday exits and hold on to a positive floating score while still navigating their 10-session window.
And the granular survival data often defies the headline numbers.
Yeah.
I mean, the mountain climbers ended Friday with 25 active units still within their mandate, and miraculously, 16 of those units managed to hold positive points.
Which is wild. Despite the overarching logic taking a negative 42.9 point hit on the exits, more than half of their actively floating roster was still green.
Right, and the wave riders had 15 active units going into the weekend, with 9 holding positive.
So what does that internal divergence tell us?
It shows us that even when a logical framework experiences a catastrophic localized failure, like the climbers and pharmaceuticals, specific subselections can still weather the storm. The logic isn't entirely broken, the parameters simply failed to account for the hostility of specific sector rotations.
And to really understand the source of that hostility, we have to zoom out from the individual units and look at the macro environment.
The index data.
Exactly. The observation logs include index contrast metrics from Friday, and this data point fundamentally changes how we view the entire week.
The major indices serve as our control group here. The Nikkei 225 and TOPIXX represent the broad performance of the Japanese market. They show us what a passive, unopinionated capital allocation would yield, which provides a baseline to judge the highly opinionated logic of our two algorithms.
And the disconnect here is just the most jarring data in the logs. Despite the wave riders banking a massive 41.7 point exit on Friday, both algorithms severely lagged the broad market for the season.
Massively lagged.
The mountain climbers trailed the Nikkei 225 by negative 7.6 points, and they trailed the TOPIXX by negative 2.7.
And that level of underperformance is notable, but maybe expected for an algorithm trapped in a nutrition cycle like the climbers.
Right.
The true anomaly is the momentum logic.
Exactly. The wave riders, our supposed victors of the week, trailed the Nikkei by negative 6.0 points and the TOPIXX by negative 1.2 points.
Which is huge.
I mean, if these meticulously engineered algorithms, capable of identifying microscopic inefficiencies in pricing, are trailing the basic unweighted market indices this heavily, well, it tells us the environment was severely distorted.
Oh, for sure. When custom, highly specialized logic fails to capture the returns of a simple index, it strongly indicates that the market is not operating in peacetime.
Not peacetime at all.
No, the normal logical parameters that these algorithms rely on are being overridden by a blunt centralized force.
It's like trying to navigate a dense forest using a highly calibrated compass, but someone has buried a massive industrial magnet right under your feet.
Oh, wow.
The
Yeah.
compass isn't broken and the laws of magnetism haven't changed, but the local environment is completely warping the tool.
That is an excellent way to visualize the index disconnect. Usually, this magnitude of divergence implies a highly concentrated market movement.
Meaning,
It suggests a scenario where a very small handful of massive mega-cap stocks were dragging the entire Nikkei and TOPIXX upward. It creates the illusion of a broad market rally.
while the rest of the market is struggling.
Right. Meanwhile, the mid-sized and smaller units that algorithmic logic often targets for precise setups, they were actually stagnant or experiencing heavy distribution.
So the broad indices looked healthy, but the underlying mechanics were churning.
Yes. This severe lag indicates an incredibly hostile week. It's potentially signaling a historic turning point in capital flow, where traditional algorithmic logic struggles to find a foothold because historical patterns are just breaking down.
But we have to be extremely careful with the phrase historic turning point. I mean, we're looking at a post-mortem here.
We are studying the blast radius after the impact, yes.
Exactly.
It's a vital caveat. This observation data quantifies exactly how hostile the environment was from June 15th to the 19th. It proves mathematically that the tools were warped by the environment.
But it doesn't predict next week.
Right. It provides zero predictive power for the future. An anomaly quantified on Friday does not guarantee a new normal on Monday. It simply logs the existence of the anomaly.
Okay, so when the 10-session mandates execute, the exits lock in, and the dust finally settles on Friday, where do the season standings leave us?
It is a fascinating watershed moment for the dataset.
Yeah, because the mountain climbers, after all that heroic midweek effort, they're violently thrown back into the red. They close the week with a season total of negative 9.7 points.
And the wave riders, well, they experienced a sharp contraction in their active floating score on Friday.
Right, dropping from Thursday's high of positive 75.6 down to 26.4.
However, their massive, locked-in exit win cemented their baseline. They end the week with a powerful positive 46.2 points for the season.
So if you were just glancing at a spreadsheet, the conclusion seems obvious, right? Momentum logic won, equilibrium logic failed.
On the surface, sure.
But understanding the deeper philosophy of Team AI Lab changes the perspective entirely. In their research ecosystem, this brutal week for the mountain climbers is not classified as a failure.
No, to view it as a failure is to misunderstand the purpose of the laboratory.
Right.
In the terminology utilized by the researchers, these catastrophic events are called fuseki.
Fuseki, stepping stones.
Exactly. Strategic stepping stones laid down to secure a future advantage. The severe attrition the mountain climbers suffered in the services and pharma sectors, that is vital, irreplaceable observation data.
Because you only learn the structural limits of an algorithm's hull by deliberately sailing it into a hurricane.
The algorithm is designed to ingest this trauma. I mean, why did the elasticity parameter fail? Was the unit selection prioritizing historical yield over present directional momentum?
It forces a recalibration.
Yes. If these algorithms only operated in the peacetime of a calm, rational market, their underlying code would remain incredibly fragile.
They wouldn't know how to execute when the floorboards are removed.
Exactly. The Friday fracture is the exact mechanism that builds long-term robustness.
The survival data, the specific traits of those 16 active units that managed to hold positive points for the climbers despite the surrounding carnage.
That data becomes the new genetic material for the next iteration of the logic. The research is literally forged in the harshness of the environment. The stepping stones of fuseki are paved with these temporary failures.
It fundamentally changes how you process data. We aren't just reading point tallies. We are watching a simulation of evolutionary adaptation play out in lines of code and 10-session mandates.
It's incredible to watch.
It forces you to rethink how mechanisms survive under pressure. Which actually brings me to a final thought I want to leave you with, connecting this deep dive to how we operate outside the data logs.
Oh, I like this.
Think about your own logical frameworks. When your personal strategy, whether you are making decisions in business, navigating a career shift, or managing your own resources, when it hits a sudden chaotic shift in the environment, what is your default mechanism? Do you double down on elasticity like the mountain climbers, stubbornly waiting for things to snap back to normal, even as the pressure builds and the floor drops out?
Or do you surrender to the momentum like the wave riders?
Exactly. Letting go of what should be and simply riding the current reality, even if it feels terrifyingly fast. Sometimes, as the observational logs clearly show us, survival isn't about perfectly predicting the math or forcing the environment to be rational.
Right.
It's knowing when the environment has changed so fundamentally that your old compass no longer works.
That is a really profound connection to draw from the telemetry. And as a final requirement, just out of profound respect for your own intellectual autonomy and decision-making process. The analysis we've discussed today is strictly an exploration of algorithmic data logs and structural market logic.
Yep, just data.
It's an objective observation of past events. The ultimate responsibility for any investment decision rests entirely and solely with you.
We are just here to read the logs and marvel at the machinery. To keep exploring these mechanisms, make sure you subscribe to the channel so you never miss our future deep dives.
Definitely.
And I strongly encourage you to look down at the show notes for this deep dive right now. You'll find the direct link to the Team AI Lab Substack. That's tmaillab.substack.com.
It's a great resource.
I highly recommend you visit the site and sign up for a regular Substack subscription. That is where you can access these granular, day-by-day observation logs, examine the specific unit draft data, and track the Fuseki stepping stones as they are laid down.
Because as we saw with Thursday's illusion of safety, the surface numbers never tell the whole story.
You have to look at the mandate, you have to analyze the exits. Until next time, keep questioning your equilibrium, and we'll see you on the next deep dive.